Global macro is entering a clear inflection point. In the US, the Fed is widely expected to deliver what may be its last 25 basis point cut for some time, but deeply mixed data and a sharply divided committee mean forward guidance will turn more cautious, with Powell forced to balance slowing labor momentum against stubborn inflation risks. Europe is moving in the opposite direction as the ECB adopts an increasingly hawkish tone, driving bund yields to multi-year highs, lifting the euro and reinforcing a higher for longer narrative alongside rising fiscal concerns. In the UK, the BOE faces a familiar dilemma. Accelerating wage growth and rising gilt yields clash with market expectations for near-term rate cuts, even as sterling remains supported by a more resilient services sector. Japan is seeing growing tension between a weakening economic backdrop and the BOJ's hawkish signaling, with rate hike bets rising despite falling real wages, softer growth, and ongoing yen weakness that suggests markets remain skeptical. Australia has delivered one of the most notable shifts, with the RBA pivoting firmly hawkish as inflation proves sticky and growth resilient, pushing yields and the Aussie higher and putting rate hikes back on the table early next year. China, meanwhile, continues to struggle with an uneven recovery as higher consumer inflation contrasts with entrenched producer deflation, keeping policymakers cautious ahead of key policy signals from the Central Economic Work Conference. That's all for now.